Welcome to our Ask an Expert show, where I invite a fellow professional in the US expat cross-border space to come in and talk to me about the issues we think Americans who are considering moving to Europe need to be aware of if they are going to thrive there. My guest today is Katelynn Minott. Katelynn is a CPA who specializes in US taxation for expatriates, and she is the CEO of Bright Tax, a firm specializing in tax preparation for Americans living abroad. With over 40 tax professionals serving clients across the world, Bright Tax are one of the leading providers of tax services to Americans overseas. With many clients in Europe, I know Katelynn has lots of valuable insights to share with us about what Americans need to be thinking about and doing from a tax perspective to make their move a success. So without further ado, let's get into this. Hi, Katelynn. Welcome to Move to Europe.
Hey, Richard. Thanks for having me today.
Absolutely. Thank you. I appreciate the time. So that was my little intro, but if you wouldn't mind giving us an abridged version of your background, your story.
Yeah, absolutely. I'd be happy to. So I am a CPA. I kicked off my career kind of on the traditional accounting track, if you will, with a Big Four firm, PwC. And just a couple of years in, realized that it wasn't quite the thing for me. And that was because I had gotten the travel itch during study abroad in college and knew I wanted to live abroad. So a few years into my career, I kind of threw everything by the wayside and moved to South America. And in doing so, began to seek online work for my CPA license. And that was, back in 2011, before remote work even existed like it does today. I happened across the founder of Bright Tax, who had at the same time coincidentally just moved to Argentina, had a tax need himself, and we met, coupled my CPA license with his business idea, and we have built Bright Tax over the last, now 13 years from there.
He's not a tax professional by trade.
No, Greg, our founder, is not. He's a serial entrepreneur, and our coming together to build the firm is kind of where all the magic began.
I did not know this. So he's just a regular entrepreneurial expat in Argentina. You're in Chile?
In Chile. Yep, that's
You're
right.
in Chile.
Mhm.
And you're offering tax services to expats just because you're looking for some sort of, you're looking for work out there.
Yep,
And Bright Tax was born.
exactly.
That's incredible. I didn't know that.
Exactly.
Wow, because you've gone on quite the journey since then. So I've got so many questions. So let me just calm down a second on that. Right. Why Chile? How did you end up in Chile?
Right. So I was an international business minor in college. I had studied Spanish kind of all throughout my academic journey. It was actually my hardest subject in school, which is funny now looking back. It's a language that I've become fluent in. But I knew I wanted to study in a foreign university where I could focus on my Spanish, and many of the European universities were actually American schools where I'd be speaking English.
Mhm.
So to kind of enhance the fluency of my Spanish, I chose South America, a little beach town called Viña del Mar on the coast of Chile. And about 5 months into my study abroad, I met who is now my husband. So love took me to South America some years later.
Oh, wow. Oh, this is so cool. So how long were you there for?
I was in Chile for 9 years. We ended up in Brazil for a year in 2020, which was perhaps not the most magical year to be
COVID.
spending a year abroad. And then we moved back to the States in 2021.
Did you? Wow, so many questions. I'm about to hijack my own podcast here. Was Brazil pre-COVID? Obviously you were there for COVID, but
Yeah, it was about 3 weeks pre-COVID. We were actually relocated there by the military. My husband was in the armed forces at the time. And February 2020, moved to Brazil with dreams of big adventures, right? Traveling the country, getting to know the Brazilian culture, and ended up locked in a small apartment for the majority of that year.
tough with kids, right? Tough.
With 3 kids, yeah.
Yeah, very, very tough.
Mhm.
So 9 years is a long time. I've just passed 10 years in America.
Okay.
Right. First of all, how was your Chile experience? And second of all, from that, what's it like being back in the US after so long away?
Yeah. Moving abroad was something I kind of sought after, again, after getting the travel bug in university as a study abroad student. I knew that's where I wanted to take my next step. And so even when I did enter the traditional workforce as an accounting major, a CPA eventually, I was kind of longing after that and thought I might find that through, my professional journey with PwC. Not quite on the timeline that I wanted. And so that's where I jumped ship a couple years in and decided to take things into my own hands. But Chile was a fantastic country to live in. We raised all of my kids were born there. They went to school there for some years. It was a really phenomenal experience, a very warm and welcoming culture. It's part of my family now, of course, with my husband being from there. So it was a wonderful, wonderful experience living abroad. Living abroad gives you the opportunity to weave together the bits and pieces of the various cultures that you get exposed to and make them your own based on how you want to live your life.
It changes you forever. But also I found it's given me a true appreciation for the many things I took for granted about the UK and about Europe. And I'm sure it was just, nowhere's perfect, right? And I'm really interested to know what it's like for you being back in the US after so long abroad. Because you've just come back with a completely different perspective and experience, I imagine, and but also, I imagine, there are things that you took for granted previously that you now appreciate. And that's a wonderful thing as well, because a lot of the time, we'll watch. I mean, look, we're all connected on social media and stuff, and we'll see, and you cannot escape from the news anymore. I mean, I've got it on over here. I don't know why I'm complaining. I'm part of the problem. You see a lot of our compatriots complaining and unhappy about stuff that that if they left, they would realize wasn't that bad in the first place, or was actually good.
Absolutely.
Sometimes that can be frustrating.
Absolutely. Well, I think that's the beauty of travel and living abroad is that it creates an alternative path. And, let's be real. I look at our website traffic, and regardless of how you feel about the what's going on in the US right now, the data shows that people are interested in alternatives right now, right? In November, our website traffic blew up because all of a sudden people are like, there may be another way. And again, I think the beauty of living abroad is that it shows you that there are many ways. There is no one right way. And it gives you that opportunity to create the lifestyle and everything on your own terms to the extent that you have that opportunity to relocate.
I think it's great that people are looking into this. I think it's only going to continue. The explode, like Bright Tax, the growth of your company over the last few years is remarkable. And I just think this is probably the beginning. And I'm sure there's been a huge spike. I'm hearing it from everyone, a huge spike after November. And whilst that's good, and I hope maybe that opens doors for people, ultimately, I hope when people are leaving, I hope they're running to something, not away from something. Because if you're running away from something, I think you're likely to maybe have an initial relief when you arrive somewhere else. But if you weren't running to something there, searching for something, I think you might end up being a bit dissatisfied. I'm speculating, but that's my gut feeling.
Yeah, absolutely. And I've used that framing a lot in our return to the US because ultimately the reason we came back to the States is to be close to family and to be in a place where we felt really confident about the education we were giving to our kids. And so to be frank, have had a lot of discomfort about being back in the States. There are things that rub me the wrong way. And, I kind of talk about the superficial ones, right? Like the giant SUVs or, the plastic wrap in the supermarket, those sorts of things. But really at its core, there are things that I feel I don't align with here in the States anymore. And that's okay. But you do have to ground into the reason, the why, right? The fact that we're close to family, that my parents are a few minutes down the road or my sister's across the street or my kids are just thriving at school. And to your point, that positive motivation being the thing that helps move you towards a decision versus running away from something. Because when you're running away from something, there's always going to be something to run away from, right?
It's not something to be undertaken lightly, but I may or may not move again. I just don't know. You can never say never as an expat. Even when you think, I've had clients who have been absolutely adamant they were never leaving the US. And then something changed. And almost overnight, they changed and decided they were going back. And pretty soon after, they go back. And I just know that's never off the table. Not necessarily going back, but I just know it's never off the table. And that's, in some ways, it can be frustrating because I don't know about you, but I'm always itching to go somewhere. But also it's very liberating because I know I could happily pick up and go somewhere else and make a great life. And I could do it again and again and again. There's drawbacks to that, but it's also quite exciting and liberating.
Yeah. It's absolutely liberating. It opens this world of possibilities up, and I think living abroad makes you feel small in the best way possible. I love that feeling of smallness because it just shows you what a big world to know and learn and be able to take advantage of that's out there. And I think that feeling of smallness can be intimidating to people, especially when it comes to moving abroad. And the barriers to moving to Europe or moving to South America, wherever it might be, can feel extremely intimidating. But I personally thrive from that feeling of feeling small, and there's so much more out there for me.
Same. Okay, so let's talk about moving to Europe. Having come from Europe and just experienced a different way of life, I also recognize that looking the other way, I think there's an opportunity for already successful Americans who have spent 30 years in the business, in the machine that is America, slogging it out and who have done well, who have saved well, are approaching the twilight of their career, and it's like another 5, 10 years, whatever, of grinding it out, or maybe there's a different way, and I think there's an opportunity for some people to go and live in Europe, to experience a different way of life, whether it's temporarily or permanently, TBD. You don't even have to decide up front, but I think there's a massive opportunity for some Americans of a certain disposition to go and change their lives and spend some time in Europe. But landmines abound. As I call it, a US connected individual outside the US or a foreigner in the US, there's just landmines everywhere. So
Yes.
this podcast is about inspiring Americans who have thought about this but never really given it any serious thought,
Mhm.
that it's a possibility and they should look into it. And secondly, to educate them on what they need to be thinking of. Be that tax, be that immigration, be that culturally, whatever it might be. Obviously, our conversation centered around tax. We're providing them with the information they need to be aware of, or not knowing all the specifics, but just have an awareness. So let's talk about that. So and I know this is unfair because Europe is a lot of countries, and
Yes.
we talk about like it was one amorphous unit. It's not. It's it's however many different tax treaties, and as we know, it's a lot is dictated by the tax treaty. But I'm an American. I've got this idea, I'm actually plowing forward with this move to Europe. What do I need to be thinking of? What do I need to be aware of
Yeah.
to make it a success?
Yeah, and I'll start by saying that historically, the conversations like this we were having were with people who were at retirement age, right? Retire in Spain, retire in Portugal, retire in Europe, and
Are we
that
talking like people who are fully downing tools? We're just going to go there and not do any work at all, like full
right.
retirement.
So yeah, I'm fully pensioned at this point, or I'm living off Social Security. How can I relocate, uproot, and move to Europe? That was historically the conversation, and I think that has changed a lot in the last 4 years, where people are now at a younger age more open and have more flexibility to explore this option. I've talked to a lot of people, very very successful individuals who come to a point maybe in their late 30s and have said, I am on paper extremely successful, but I'm ready for something more. And that's where this opportunity to potentially relocate to Europe, maybe not waiting till you're 65 and at retirement age, but rather accelerating that decision until now. So a lot of these conversations that traditionally we were having and looking at pension income and Social Security and helping people navigate the implications of that are now shifting to people who are more actively earning income, if you will. So what are the things you need to think about? I mean, let's start from the framework that I took this leap myself, some years back. And even as a CPA, I was completely unprepared for what filing taxes from abroad meant. And so certainly this can feel intimidating and a huge barrier to entry to somebody who doesn't have an accounting background or a CPA credential, right? And
Katelynn, I also find, and I'm so excited, I'm so interested to hear where you go with this. I find people sometimes will brush it off totally.
mhm.
How bad can it be? Oh, it can be really bad. Once you're dealing with mismatched tax years and, all the reporting requirements, all the things you can and can't hold, oh, it can be bad.
It can be bad, especially if you're not proactive about it. And I would say one of the big areas that people get tripped up on is foreign banking, and that's a necessary reality when you move abroad. Of course, you need a bank account to at least to have your day-to-day expenses going in and out of. But one of the areas in which we see let's see, the American taxpayer, quote unquote, discriminated against abroad is in banking, because the IRS and the FATCA legislation that exists to prevent, white collar criminals from money laundering is actually creating a burden on foreign banks that has a trickle-down effect and impacts the everyday American taxpayer who's just trying to live a day-to-day life abroad, right? They're not hiding anything. They're not trying to avoid income tax reporting, but they just want to open a bank account. And the fact that they have a social security number and a U.S. tax requirement is preventing them from being able to do banking abroad. And so I would say one of the first things to think about is, how are you going to manage your day-to-day finances? And then from there, we get into the complexities of looking at a holistic tax situation. On the U.S. side, of course, that's consideration. But wherever you're moving to, especially if it's in Europe, there's going to be a whole nother tax system that needs to interplay with the U.S. system. You need to understand the implications of both. Double taxation is kind of the catchphrase that people mention when it comes to living abroad. In practical application, it's not quite that blanketed, right? Usually you're not paying taxes twice on the same income, but it's kind of, you need to look at that as a concept as you plan financially.
Americans have to file taxes and pay taxes abroad, but they often get allowances for taxes paid where they're now residing. And that offsets a lot of double tax. But in my experience, and this is certainly true if you're going to be a wealthier expat, there is usually some double taxation. Some falls through the cracks. Yes, it's not as bad as it sounds if you just talk about double taxation. There's a lot of relief, but there's not relief for everything, right?
Right. Exactly. Things like the net investment income tax. So if you have income sources like investment, dividends, capital gains, there's the possibility that you could have a U.S. tax liability arise that you can't wipe out with what's called the foreign tax credit. So there are definitely little leaks that trickle through. The other thing that occurs when people are moving to Europe is that they're typically going to find there's a higher tax rate in the European country that they live in. So to your point, yes, you can use your foreign tax paid to reduce your U.S. tax bill, which may mean a zero tax bill or a small tax bill on the U.S. side. But overall, you probably have a higher tax liability. So also something to consider when you're weighing the pros and cons of a move: higher or lower costs of living, higher or lower tax rates. That's all part of the equation, if you will.
Do you find that people reach out to you before they leave or when they're already in place?
A little bit of both. Obviously, we prefer the proactive outreach, the conversation where we can give people the tips and the tricks, the things to look out for, connect them with the right advisors in the right places, whether it be a financial advisor or a foreign tax pro. But there is an overwhelming number of individuals abroad who have lived, whether it be for 30 years, their whole life, 3 years, whatever that number might be, and just realize for some reason they have a U.S. tax filing requirement. So, I come back to myself. I moved abroad and didn't really give it any thought. Of course, I filed the first year I was abroad because I realized, oh crap, I have to get this done. But there are people who don't ever have that moment of realization and find themselves a few years into a move abroad and they have to catch up on their U.S. taxes, which is something we help a lot of people come back into compliance with.
Is that still happening? Are
It's
people
happening.
still... Well, let me ask you two questions here. I can kind of understand it if someone's been away for 30 years, because it was very different 30 years ago. And maybe they're just waking up to it now. But are people still moving abroad and then 2-3 years in finding out? In this day and age where so much of this information is online already, and I'm assuming before they move abroad, they're doing a lot of Googling. Are you still finding people don't know?
Every once in a while, we'll come across somebody who, that recently has had a move. I think the other side of that coin is that maybe people know, but have some level of misinformation about what the requirement is. So a really good example of that is the tax treaty. Oh, well, the US and Spain has a tax treaty, so I don't have to file. my tax return when I'm in Spain, right? There's a lot behind that, the existence of a treaty never prohibits you or precludes you from having to file a U.S. tax return. In fact, most of the treaties have a provision that say they don't even apply to a U.S. citizen in the first place. So the treaties are almost entirely unhelpful when it comes to U.S. tax filing. But the other number that I see thrown around a lot is the $100,000 threshold. There's this concept that unless I'm making it $100,000 or more, I don't have to file a U.S. return, right? I hear that a lot in conversations with potential new clients all the time. And it's linked back to what's called the foreign earned income exclusion. And it's a provision that you can exclude about $130,000 of income, but you don't just get it for existing. You have to go through the process of filing a return to take advantage of it. So it is less common that somebody simply doesn't know. Like, it is written in your passport. It says you have to file your worldwide income. But it's that misinformation of what really the requirement is once they've moved abroad, I'd say more frequently.
So should we talk about some landmines? So like some specific landmines. So the obvious ones that spring to mind, which Americans won't be used to, is the filing of informational returns. So you've left America, and for the first time ever, you've got foreign bank. Well, hopefully, if you can find an institution that will take you, you've got foreign bank accounts. Maybe you're even maybe, and this is a big maybe, but you're able to contribute to a foreign pension and stuff. I know that's a hot topic, so I'm just saying maybe theoretically you're able to accumulate financial assets outside the US. And you might not be aware, but you have to now report above certain thresholds, which are generally quite low. You have to now report these to the IRS on multiple forms, even when no tax is due. I can't tell you if I had $1 for every time I was told, but no, there was no tax due. I took no withdrawals when I find someone's been underreporting, and not doing so can have really kind of draconian consequences. The penalty as a Brit, and maybe the Americans are more used to this, I don't know, but as a Brit who's used to seeing HMRC penalties, IRS penalties for even innocent non-compliance are magnitudes worse. I mean, basically, it seems everything starts at 10 grand.
10,000, that's the magic number when it comes to international informational returns. And to be honest, we don't see those a lot in practice. You'll go on Google and you're going to find a lot of horror stories about them. They don't pop up as frequently as perhaps, the news might show.
In my experience, everyone is in some form of non-compliance, and there are various ways to proactively come into compliance.
Mm-hmm.
And what you're saying is if you follow one of these routes, whether it's an approved system or reasonable call statement, you find that generally these are accepted and penalties are not waived. Penalties are not applied.
Are waived. Exactly. Yeah, we use a lot of different procedures to help people get back into compliance. If you've missed your foreign bank account reports, and we should talk about that in detail. What does that mean? But it's a $10,000 penalty. It's not an automatic penalty, so it's not like you submit it late and that bill is going to show up the next week. But there are procedures you can utilize to ensure that you're getting back into the system and doing so in a penalty-free way. Another example of that is something called the streamlined procedure. We've done thousands of those over the last decade, and it's more designed for somebody who's been abroad for a while and who hasn't been filing for each year. So catching them up by doing 3 years of returns instead of all 15 that they've ever missed, right? So there are pathways to getting back into compliance because the IRS is aware of the level of non-compliance that exists out there with Americans living outside of the country. Again, I think that's less frequent with somebody who is just moving abroad, maybe now or in the last couple of years. But there are pitfalls that those people can still easily fall into because as an American, let's say I'm a W-2 earner here in the States, maybe I have a brokerage account and I'm interested in relocating abroad. Suddenly I open a bank account abroad, I have money in that account, and I have to just close that in an F-bar. who's told me that? How am I supposed to know about that requirement? And then once that account gets to a certain threshold, I'm also filing a Form 8938. Wait, but that's the same information that's on the FBAR. There's 2 of them.
Yeah.
And then take this one step further. If I go so far as to invest in a fund outside of the US, we can talk about, the accountant's favorite 4-letter word, the PFIC,
Oh, we
the
need
passive
to.
foreign investment
We're
company.
going to have to.
I mean, that is the biggest pitfall I see people fall into.
I just want to stress the programs that you referred to there, particularly the Streamline, which is a wonderful program for people outside the US. The key here is that all the behavior you're referring to is non-willful. Right, so don't think you can think, oh, do you know what? I'll just worry about. I know I should be doing something, but I'll worry about it in 3 years' time. I can probably do this streamlined. You can't, because that's willful.
Yep.
The moment you cross the line from non-willful, i.e., you didn't know about this, to willful, like you knew you had an obligation and you chose not to meet it, that program ceases to be an option for you, and the other programs, when you're willful, are much, much less forgiving.
Exactly. I actually had a conversation a couple of days ago with a potential client, talking about a streamlined procedure. He'd been abroad for some years, and I said, well, there's this procedure. You can file the past 3 years, and it'll waive all of the years you've missed. I think it was 8 or so in his case. And he said, well, why don't I wait another 3 years and do the streamlined procedure then, right?
There you go. Yeah.
And, there's a gray area. So if you wait a couple of months, right, to get your paperwork together, to get the tax returns prepared, there's a little bit of a margin for time there. But I think putting it off another 3 years, you have a weak argument to be able to say, I didn't know for the past 3 years, right?
I've always worked on the assumption that the moment you knowingly submit an incorrect or an insufficient tax return, you've crossed that line. And if he waits a couple of months, well, and you could extend your tax return, I assume, no problem. But once you've knowingly submitted a tax return, knowing it's deficient, then I think it's off as far as I understand it, not a lawyer, it's off the table to you, and you just don't want to cross that line. But then I also find, we're going off piste here, but I find people sometimes don't realize what they're saying and what they're suggesting. One conversation sticks out to me. I remember having a conversation with a client about they were going to come into a UK state pension, small potato compared to Social Security, but we call it beer money, not nothing. A few $1,000s each, him and his wife, and you have to declare it on your US tax return and pay income tax. And he said, I think my patience was at a low ebb on this call. It was in fact, it was definitely a low ebb for reasons I won't go into here. But we were on the call, and we were with some other people as well, and they said to me, well, how will the UK know about this money? Like, why don't we just keep it in the UK? And how will the US know? Why don't we just keep it in the UK and spend it when we go on holidays? I said, well, yeah, if you want to commit tax fraud, that's totally what you can do. They go, oh, no. They completely backtracked. They had no idea that what they were suggesting was tax fraud.
Right. I get the same question a lot. But how are they going to know? How are they going to know?
Yeah.
And on the one hand, once they do know and once they've contacted you, it's all over, right? There's no use streamlined procedure at that point. So that's sort of the way that I encourage people towards compliance is take your opportunity, right? The gates are open for you. But on the other hand, FATCA, the legislation that now requires foreign banks to report financial information of Americans back to the US, I mean, that creates a synchronicity between financial institutions and foreign tax authorities that really prevents anybody from hiding anywhere anymore. And, I don't like to encourage people with scare tactics, but it's becoming a greater reality that it's not quite as simple as, hiding your money in a bank account abroad as a way of, sheltering your assets from income tax like it historically may be. But again, 99% of the clients that we talk to are people who are just trying to do the right thing. And honestly, this process of doing the right thing is not an easy one either.
No, and it's scary. It's really scary. Although I do find well-meaning, honest people who do want to pay their taxes and be in compliance with the law do say things like, how will they know?
Right.
with alarming regularity. And I don't normally kind of dismiss it the way I did, but there were other things going on in that conversation that caused that reaction.
Yeah. I mean, the other thing that I see with some frequency and that same question being asked is where it's somebody in the States who has offshore accounts and offshore assets. There's a version of the streamline procedure that's designed for people in the States, and it has an automatic penalty of 5% of your foreign assets. So when they start to weigh, okay, well, there's going to be a penalty of $23,000 versus can I play this game and see if the IRS catches me? That's where their risk tolerance suddenly starts to hike up because they're sort of giving away and showing their cards to the IRS with a requirement to pay a penalty. But it's tricky business for sure.
That is a dangerous game to play because if your streamlined application is rejected for what essentially is like fraud, the gloves are off. They're coming for you, I imagine. So just going back to what you said about FATCA and the organization. So my understanding of it is FATCA required these foreign financial institutions, banks and the whatnot, investment firms, to report back to the IRS on any of their account holders who are US persons, green card holders, passport holders. Now, I don't profess to knowing how the IRS works. I'm terrified of that institution as everyone else is. But I imagine there is a unbelievable amount of data has since flown to the IRS of Americans or American connected people holding assets accounts outside the US. And there's no way the IRS can access all that, but it has it. And one thing is that eventually they'll get round to reviewing it, especially now AI is around. You just set AI to troll this and match, this so-and-so has an account here as reported by XYZ Bank, but it doesn't appear on their FBAR or H938. Send them a letter, ask them to explain it. It doesn't take, one assumes that can't be too far away. And then the other problem is people might think, well, yeah, but if it's from 5 years ago, 10 years ago, does it matter? Statute of limitations. Well, yes, because if you're not reporting these accounts, or if you're not submitting all these forms, the statute of limitations can be left open indefinitely.
Exactly. Right. It never closes because it was never opened in the first place. And well, I guess coming back to kind of barriers to entry of living abroad, there is usually what will happen when you're opening a bank account abroad in Spain and Italy, in Europe, they're going to give you a US tax form to fill out. And you're going to say, what? What? I thought I escaped all of this by leaving the States. And they're going to ask you for your social security number. And that is if it's a bank who has opened their doors to accepting Americans. So again, what we find is that many foreign banks don't even want to deal with the headache and the cost of compliance with this. So they've simply shut their doors to any sort of U.S. taxpayer. But on the other hand, those who do accept an American taxpayer, they're going to request your social security number. They're going to do on their side of the exercise, the compliance of getting your social security number, your information, and holding that to be reported back to the U.S. if necessary, if requested. The IRS isn't at the point of a free flow of information. I think there's a lot of debate about whether the cost of actually getting that information and actioning it is going to outweigh the actual income and tax that they would recuperate. So there are a lot of opinions that say it's actually more costly for them to enforce FATCA than they're actually going to benefit in terms of revenue from. So it's still kind of an open question about what that future might potentially look like, but we don't see right now situations in which it's as simple of I've opened my foreign bank account. The IRS knows about it. They're not quite that sophisticated yet.
But I tell you though, if I found myself, do you know what I did when I first arrived here? I, like everyone else, didn't know. I missed my first FBAR. I had a tax preparer, but somehow it was missed. I had to repair. If I was in non-compliance, I couldn't have that hanging over me, knowing the potential repercussions. And knowing that in all likelihood they had that information, even if they haven't got around to reviewing it yet,
right?
I would, and knowing that there are routes to compliance, not stress-free routes, but routes, I would definitely. I wouldn't want to have that hanging over me. Certainly not going into retirement, when that would be scary.
Yeah, and I want to come back to something you said, that in your first year in the States, you missed the FBAR, even though you're working with a tax professional. And that is something that is extremely common, that people get advice from their CPA, their CPA on the corner who's used to an everyday American taxpayer. And I have clients who were told by their CPA that they don't need to file from abroad, let alone the FBAR. So it's really challenging, again, to get good information, because who are you going to trust if you can't trust your CPA to give you good information about how you're supposed to be filing your return? So we find people, again, moving abroad. My CPA said, while I'm abroad, I only need to report my U.S. accounts or my U.S. income. And so maybe not as black and white as filed, didn't file, but only reported my U.S. assets and accounts to the IRS instead of all of the investments that I have abroad, and maybe the rental property I have abroad, or whatever that might look like.
Katelynn, every time we take on a client who works with either DIYs their own tax affairs, or works with a local tax preparer, or has a financial advisor who's local, there's always problems. I mean, this week we're talking to someone who's been here 20 years, has a financial advisor, PFICs, which we should talk about now, but there's PFICs in there, and one conversation with us, and we're like, okay, there's a couple of problems here. And part of my mission is to reach expats here and people going abroad and educate them, but also so much of this could be solved if we could reach tax preparers and financial advisors and attorneys and say, listen, the moment you get a whiff of something cross-border, you need to know it's dangerous. And you need to put your hand up and say, I can't do this. Not just, I call it a tumbleweed moment. And the client brings these things up. I can imagine that it goes awkwardly silent in a meeting while the advisor waits for the tumbleweed to pass, and they can get back to what they were talking about. But that tumbleweed is dangerous. It's loaded with dynamite. How far can I stretch this metaphor? But it's if we could get people to recognize that is a sign that, okay, we need to stop and call in the cavalry, because these problems can be easily solved early on.
Right. Early on.
They metastasize over time.
Yeah. And I mean, so dangerous that many, many times the cost of compliance is more expensive than the benefit of the investment in the first place.
Absolutely.
And so if it's not caught early, if it's not taken care of proactively and set up right from the start, you're going to find yourself with a huge tax bill. You're going to find yourself with a huge tax preparation bill, and all of the complexities of trying to understand why investing outside of the U.S. is just absolutely tanking the benefit of your investments in the first place.
Let's talk about it. Let's tell people what PFICs are. So I'll hand it to you. This
is
a horrible one, folks.
This is a bad one. Again, this is our 4-letter word. So a PFIC is a passive foreign investment company, and it is really the best explained as a pooled investment fund, like an ETF, like a mutual fund in the States, but it's registered outside of the U.S. instead of on the U.S. markets. And so because the IRS has their own way of regulating investment funds in the States, and they don't like that other governments have other ways of doing it, instead of just taxing it like they do a US-based fund, they're going to apply the highest tax bracket, so the 30% tax, they're going to slap it on each year, in addition to interest going back to the beginning of essentially when distributions from the fund started to accumulate. So in simpler terms, owning a pooled fund, a mutual fund outside of the U.S. is an absolutely sometimes devastating decision from both a tax preparation perspective and an investment health perspective.
So if you're an American going to the UK, just going to talk about the UK because I know it the best, and you start getting paid in pounds, or you start receiving money in pounds, and you think, oh, I'd like to invest this, I'll invest it in a UK brokerage account, which is called a GIA, not that that matters, and you think you'll buy ETFs or even mutual funds, which you shouldn't do nowadays, but ETFs, these are PFICs, and it's going to cost you, probably you won't do it right and you'll be not tax non-compliance. That's another problem to solve. But if you're doing it right, you will have the annual reporting on each and every PFIC you have, and the tax plus interest burden is terrible. Okay, I've got to tell you a little story. It sticks with me forever. I'll never forget this. I think this was in the height of COVID. I got a call from someone, and they opened by saying, I'm an accountant. I'm a chartered accountant, which is the UK version of CPA. I'm a chartered accountant. I do my own taxes. The moment I hear that, I know we've got a problem. Long story short, this guy had been in the US since the mid-80s. This is 2020. He'd moved here with a portfolio of several £100,000 in mutual funds. I think it was Templeton. I can't remember, but it was, mutual funds. And whatever this was, 30 years later, 35 years later, he had a conversation with me and found out they were PFICs. They were now valued at about £1 million. And by my back of an envelope calculation, 100% was going to go in tax, federal tax, state tax, and then interest. Not even dealing with the non-compliance. Not even dealing with the fact that every return he submitted potentially is opened because of statute limitations, missing 8621s. Hundreds of thousands of pounds up in smoke. And if you go to America, hopefully the part of this podcast stops people ever doing this, but if you're an American going to Europe and you're going to get paid in euros or pounds or whatever, almost certainly the best route for you is going to be converting that into dollars and bringing it back to the US, investing it. Or there are PFIC-free solutions. Our friend Brian Dunhill has a great solution. There are options out there, but they tend to be more expensive and more cumbersome. And most people, in my experience, convert that money to dollars, bring it back into the US and invest it there, even though they're outside the US.
Right. Yeah. And the alternative to that would be, direct invested stocks. And
yes,
that's where you're creating risk, right? You're not diversifying necessarily by just investing in that way. But we do see a lot of people diversifying in other ways, right? Investing in property, real estate, etc. But when it comes to financial investments, that is absolutely the simplest path forward, right? Bring it back to the States, invest in the U.S. markets, and that alleviates the potential tax burden or the tax filing burden, at least.
Looking at Europe, are you seeing... Are any particular hotspots? Is there anywhere that Americans are... one, is there anywhere that you're seeing that Americans are migrating to over other places? And secondly, that aside, are there any places that you think are particularly beneficial to Americans from a tax perspective? I don't think you shouldn't move for tax, folks, but it should be in the tapestry of your decision-making process.
Yeah, that's a great question. Again, I think in Europe in general, you're never going to be moving for tax reasons, maybe cost of living reasons, but overall your tax situation is generally going to be higher. You're looking for, at that point, a better standard of living, whatever that might look like to you. I think we rarely see people moving to Europe for strictly tax reasons.
Sorry, just to say, where do people move for tax reasons? And if, as a Brit, people move to Dubai for tax reasons, or the Caymans. As an American, if I'm going to get taxed my worldwide income, where do Americans move?
Right.
Is there an equivalent?
There isn't, because there are tax mechanisms that allow you to reduce your U.S. tax bill from abroad, but they're really capped. So beyond saving income tax on the first $130,000, which is not a small number, right? You may be saving yourself $17,000 or $18,000 in tax a year. You really can't push beyond that, because the other tools you can use to reduce your U.S. tax bill are associated with foreign tax credit. In other words, you have to be paying tax abroad in order to save on the U.S. side. So as an American, you can't really move abroad to save for tax reasons. And for that reason, coupled with the prohibitive banking, the PFIC, all of these limitations, we're seeing more and more people arriving at the conclusion that giving up their citizenship is the right next step for them.
That's okay. That's going to be one of my... Yeah, we should definitely talk about that as well. I'm interested. I know I'm bouncing around a little bit here, but state tax. If I'm in Connecticut, if I left Connecticut and moved to Europe, would Connecticut state tax follow me, or could I shed that?
Every state is different. I don't know Connecticut like on the back of my hand, like other states, but some are more challenging than others. So the best tax efficient move that you can make if you are planning to move abroad for some time is to actually move to an income tax free state. So get yourself to New Hampshire, Florida, Texas, and then move abroad once
Hmm.
you've really established residency in one of those places first, because
Okay.
then there's a clean break with no tax at the state level going forward. There are many states that will say, even though you've lived abroad for 12 years, you are still a New York State tax resident. And so you should have been paying taxes for the last 10 years. And that's something that it's really important to get strategic about when you're planning for a move.
Did you use that example on purpose? Then is New York one of those states that will do that will follow
New
you
York is one of
aggressively?
those states. Yeah.
Okay,
Mhm.
right.
California is another fun one if you
Of
don't do it
course, New
right.
York and California are. Of course.
So that's an area that people should be very, very strategic about when they're planning a move abroad, whether it be for a year or two. Looking at the state tax implication of your move, while it might feel small in comparison to, your federal tax rate, the state can sneak up on you if you're not careful.
Wow, I hadn't considered that. Wow. Okay, that's I think that's really valuable advice. Careful of state, because that is just something that even I hadn't thought about, and I think about this stuff a lot.
In terms of where we're seeing people move right now, Portugal seems to still be a
Yeah.
hotspot. Spain is another. I would say those are the two big ones, at least that I see in my network and with the clients that we're talking to most frequently.
And I know I mean, and I know Portugal and Spain are both high tax, but are they tax friendly too? I know, but I also know different tax regimes can apply. So I know there's different visa regimes, but then there's also different tax regimes. I don't know about them specifically, but can if an American goes to Portugal or Spain, are they just going to get slammed, or is it manageable?
It depends. It depends on what type of visa you're on. Like you said, there are certain visas that offer tax holidays that you can take
Mm.
advantage of for some time, and you can get strategic about that. And I'm certainly not an immigration expert in any of these countries, but we like to get involved proactively is to work with a tax advisor in Portugal, come together with your US CPA, and look at the income situation, the assets of the taxpayer, and say, hey, this structure might make sense, right? So for a business owner, do we want to set up an S corp or an LLC? What makes sense here to ensure that we're not just again taking advantage of the benefits on the U.S. side, but whatever tax system and definitions apply in the foreign country, we're also being able to optimize the overall comprehensive financial situation of the taxpayer, considering all of those dynamics.
Is that what you will do? Is your preferred way of working? Let's just pick Portugal. Is we will be your US tax preparer and tax advisor, but we want you to have a local Portuguese representative as well. And do you have like a network of people? So you don't need someone to come with a Portuguese person and say, "Oh, this is my Portuguese guy." You can help. You can create that.
Exactly.
Okay.
So for key
Yeah.
countries where we have a lot of clients, Portugal, Spain, France, the Netherlands is another, the UK, we have identified foreign professionals who we are confident in their level of service and their professionalism and expertise, and we
Good.
offer that.
Right, because that is absolutely critical. I am harking on all the time about the need for tax professionals. If you're an expat in America or an American abroad, you need a cross-border tax professional. But what I always say is just US cross-border. I've said it this morning already on an email to someone. Just US cross-border is not enough. You need someone who understands the local domestic as well and the interaction between the two. And someone who just does US, even if they're cross-border, can't know that. It's just too much to know. So having that additional resource and expertise is a critical piece of the jigsaw.
Right. So to your point, just your everyday Spanish tax advisor may still not have the understanding of what it means to be an American in Spain, and so
Uh-huh.
it's hard to come to bring those professionals together and find them in the first place, really. But I think it's really critical, especially when you're generating income and planning for a potential move.
Okay, Katelynn, as we wrap up here, let's just have a quick chat about exit. I am fascinated by this because giving up your citizenship and there's hoops. And I've always worked on the assumption that people wouldn't be giving up citizenship. I know the numbers are increasing, but not relatively. I know numbers are increasing, but to give up your citizenship is it's a big deal. Yeah, it's a part of your identity, and I imagine that's keeps the numbers well down. So I'm really interested to hear your experience. Well, first of all, let's tell people what that involves and what that means. But also, I'm interested to hear your anecdotal experience of are people doing this?
Yeah, I think we see it in our firm. Clients who have been with us for 10 years are finally like, that is enough. I've
Really?
loved working with you, but I cannot justify paying tax fees for a country that I have no plans to return to, that maybe I've never even lived in, right? Since I was 3
Oh,
months old.
yes. Yeah, yeah. No, I can understand that. Yeah, yeah.
I think less often you'll see the person who's made a recent move abroad giving up their citizenship. It tends to be somebody who has a really, really strong rooted tie to a foreign country and no intention of ever returning to the US, probably doesn't have family in the US, because like you said, it's a really important personal decision beyond the financial implications.
So not the recent expatriate, but the accidental American, the person who was born, it is Spanish, but was born to an American parent, or something like that, where they're not American, they're Spanish. They do have an American passport, but they are not American, they are Spanish. Yeah, no,
Right.
I totally understand that. But the recent expat, by recent I mean, and 20 years even,
Hmm.
who
Yeah.
who who was American, like.
One of the stories that I will always remember in practice is a story of a client that I had in France who was in fact an accidental American. He was born in the States, moved back at a couple of weeks old with his family to France, and then he showed up to his bank one day and they said, "Give us your social security number. You were born in the States." And he said, "I don't have a social security number. What are you asking for me?" And they froze his account. He didn't have anything in the States. He never had any ties there, any finances there. And we helped him through the process of giving up his citizenship, because until then, his entire financial well-being was locked in France. So that story will always stick with me. But in
Did he
terms
have to
of,
go through streamlined?
he had to go through there's a specific procedure for former U.S. citizens that is
Uh-huh.
similar to the streamlined, in that it's reduced penalties and it actually reduced taxes in some case. But imagine that waiting period where you can't do
Yeah.
anything with your money. Imagine you only have your livelihood in one place, and all of a sudden you have no financial mobility whatsoever.
Terrifying. When you have no connection to the country, it's wild. It happened to Boris Johnson. It caught Boris Johnson, the ex-British Prime Minister, selling his house. I think he even got stopped coming into or out of New York because he was born here. It's crazy. It's crazy. But people should know, giving up your citizenship, though, if you are a wealthy, successful American, because this is in the news right now, that I don't know if you've seen, there's this very, very, very wealthy American Edelman who's been accused of tax fraud. He left Texas in his 30 years ago and has since been very successful and has now been accused of wasn't filing tax returns. And if he had just expatriated
Right.
30 years ago,
It would have all been behind him. I think it was in his wife's name. I saw that story this
yeah.
morning as
Well,
well,
he
I
says it
think.
was in his wife's name. I think they're
Okay.
saying. I think
Okay.
that's
Maybe not so
a right
not so
saying.
content.
Yeah, it was.
Yeah.
Um, but if you do expect, there's an exit tax. Yeah. So if you do have asset, if you have a net worth of more than $2 million,
Right.
you're gonna pay an exit tax on the way out, and that exit tax can be pretty devastating. Because as I understand it, not an expert here, but it's a phantom tax. So sometimes you don't get relief, double taxation relief. So you can get taxed on exit from the US, and you could also then get taxed when you surrender or sell that asset wherever you are now without any relief. That could be devastating. So real careful planning and preparation needs to be undertaken there as well.
Right. Yeah. And so people come and say, "I'm so over this tax thing. I don't want to do taxes anymore." But actually, we have to tell you, you have to file your taxes in order to get out of it. So you have to have 5 years of compliance up to the date in which you renounce your passport. And then from there, like you said, there's an exit tax possibility if you have a net worth of over 2 million. And what that exit tax looks like is the IRS treats you as if you've sold all of your assets, all of it. So, that personal residence exemption that you get, 250,000 on a capital gain for your primary residence, you're not going to get that when you give up your passport. So the benefits of capital gains and whatnot don't necessarily apply through that exit tax exercise either. So it's a heavy decision. Again, it's not something that we're seeing in huge volumes. The numbers are growing, but relative to the population of the U.S., it's not
Yeah.
an alarming figure. But there is that tax requirement that you have to go through to really sign off with the IRS. And it's not only for U.S. citizens who give up their passport, it's also for people who relinquish their green card. So
hmm
the other thing we see a lot is people leave the States and they say, my green card expired, I'm out of here. There's actually a formal process of relinquishing your green card, and you have to file a form and go through the exit tax potential calculation. So what could seemingly be perceived as a simple, clean exit often gets very complicated if you're not taking the right steps.
I have stopped more than one client making that mistake with the green card. Have you ever heard of anyone having trouble getting back into the US after announcing their citizenship?
So at that point, your immigration rules are the same as anybody else who's a non-citizen. So, if you have a tourist visa, that's how you enter the US. Where we see people potentially having entry problems actually as a citizen is where you have a US tax bill in excess of $50,000. So it's actually more when it comes to IRS implications on the you owe money side of things than an actual immigration perspective.
The message for anyone listening to this is it's more complicated than you think. It's manageable with the right team around you. And that I think just saying that terrifies people because they think horrendous cost, but it doesn't have to be. It can be, you tackle this on your own at your peril. Just don't. That's my message. Just
No,
don't.
because if
It's
you do,
just
you're
too
gonna
much.
come back and ask for the help to fix it later anyway.
Yes,
Like, do it
absolutely.
right the first time.
It's going to cost you more in the future, or you're going to have this compliance risk hanging over you forever, which I don't know how people live with that. But just there's more to it than you think. It is doable. Many people have done it. It is manageable. Get into compliance from the outset if you can. And if you've stumbled, get into compliance proactively. Don't wait for a knock at the door or a letter in the mail. Get into compliance and stay in compliance, and work with a team who will help you avoid the landmines. There'll be opportunities to take advantage of, yes, but main thing right now I think is avoid the landmines.
Right. And there's a growing number of professionals out here who understand this, who focus and specialize in this. This was not always the case. And so, again, surrounding yourself with the right team of people with the right expertise is going to set you up for success and make this smooth because we're all people who want to empower that global mobility, that ability to go kind of chase after your dream life and live abroad and create that lifestyle that works for you wherever that might be. So again, surrounding yourself with a team of experts who can empathize and understand the struggles of somebody moving abroad is absolutely critical.
100%. I love expats. I want to encourage more people to expatriate. I think it changes your life. And I want people to avoid some of the mistakes that I've made. And I want people to avoid some of the mistakes I've seen other people make because they're all avoidable, but they cause serious anxiety. And sometimes it costs real money.
Yes.
So that's the mission. Cool. Katelynn, thank you so much. Where can people find you?
You can find us at brighttax.com. Hello@brighttax.com is the best way to reach out and send us an email. And there you can meet one of our CPAs for consultations, proactive planning, or sign up for us for tax prep.
Excellent. Well, thank you so much for being on Move to Europe.
Nice to see you.
Cheers.